Bally's in the WNBA's Phoenix Mercury announced a 15-year sports betting deal that will begin on July 1st. The company say this is the largest official team sponsorship in the history of women's sports. As part of the deal, Bally's will host and manage an online mobile sports betting service in Arizona and operate a sports book in the vicinity of the Phoenix Suns arena. Joining us for a Yahoo Finance exclusive is Bally's chairman, Sue Kim, and the CEO of the Phoenix Mercury and Phoenix Suns, Jason Rowley. Good morning to you both. Sue, let me start with you here. Why did you start the focus with the WNBA?
Well, good morning to you. And, our focus actually didn't start there, but it ended there. We're really excited for this deal. The critical business proposition for us is that Arizona is actually a really important state for us to do business in. And, we were slightly late to the party. The first 6 licenses for mobile sports were tied to the basketball, baseball, hockey, and football teams, as well as a golf tournament and a NASCAR race. And so there wasn't an easy way for us to get in, but we saw an opportunity in the fact that the state enabling law actually allowed for up to 10 licenses. And we noticed that there was a WNBA franchise, and that franchise, did not have a sports betting partner. So we had an opportunity to access the sports betting market in Arizona through the WNBA, the fantastic Phoenix Mercury franchise, and so we just took advantage of this wonderful opportunity.
And Jason, I'd love to talk a little bit about how the WNBA is thinking about the role that sports betting might play in that league. As we start to see more leagues embrace the gambling side of the equation, how the Mercury went through the process of finding a partner, finding the right partner, and what conversations at the league level have been like as well.
Yeah, absolutely. And thanks for having me as well. We're extremely excited about the partnership. Like any league, women's or men's, the fact of the matter is you look for these types of opportunities to really elevate your brand. You look for great partners who know how to operate in a particular space, which we certainly have with Bally's here. And so the analysis is the same as it would be for the Suns or for an NFL team. It's really no different for a WNBA team. The fact of the matter is the interest in women's sports and the interest in the WNBA is at an all-time high. And so when you look to operate in this state, which has a very unique and I think very forward-thinking sports betting platform and structure from a legislative standpoint, being able to utilize and access those markets and opportunities with a partner like Bally's is just something we're extremely proud of and extremely excited for.
And, Jason, on our side of the world, just looking at public markets, obviously you've got, names like Penn and DraftKings, and we've just seen the move into sports gambling. I'm curious, operating a franchise and 2 franchises in your case, what you've seen as, how much of a driver of interest the opportunity to gamble more readily for fans has been, and how much interest you think that'll drive, both the WNBA and the NBA side, maybe over the next 5 years as this space, really matures and finds its footing potentially in all 50 states as well.
That's right. I mean, there is very much there's an opportunity here, I think, for tremendous growth. They're just kind of scratching the surface. Obviously, not every state has enacted this type of legislation. If I remember, it's maybe around 15 or so at this point. I could be off there a bit, but at the end of the day, the fan engagement that this creates just gives you an opportunity to have a larger reach. It gives people who might not necessarily have traditionally been a sports bettor to have easy access and responsible access as well. You got to do it the right way, and I know we will do that as well, and I know Bally's is committed to that. So it's really about giving your fans an ability to engage at a higher level at a more frequent basis, and I think that's going to really continue to drive interest in sports, and certainly going to continue to drive fan affinity across all leagues.
So the shares of Bally's are up about 75% since the Sinclair deal last year. It's a deal we covered here on Yahoo Finance. What's the state of your business? How many casinos do you have in operation now? You have really worked hard to rebuild the brand since you've been at the company.
Thank you for that. No, we're now up to 16 casinos across 11 states. And actually, so that's on the physical casino side. But obviously, as you know, we've also wanted to take control of our, online, our digital future. And so we, bought in sports betting technology companies, daily fantasy companies, and have now, not only looked to roll out, sports betting and ultimately iCasino in the states that we operate in, but also in states that we don't. So actually Arizona, and this deal marks our 4th state that we have done an access deal into where we don't have a casino, and our 15th state in total where we plan to do business. Arizona is a very exciting opportunity for us because the Sinclair deal, which renamed what was called the old Fox Sports Nets, Bally Sports. Actually, Bally Sports in Arizona hosts, the 3 major, men's franchises. So, basketball, hockey, and baseball all play on Bally Sports already. So we have a ton of opportunity to promote our product, and with the access that the WNBA brings, I think this is just an amazing market for us to go out and introduce sports betting to sports fans. And I think it's going to be, as Jason was speaking to, it's going to be an audience magnifier, because in the end, sports betting is just another way to be more engaged, more amused, more entertained by the sports viewing experience, and that then it becomes much more than a one-way experience. It becomes a two-way experience, and that's the future that we have imagined. That's actually the future that we were looking to capture with our partnership with Sinclair, and we're really excited to prove that out. And actually, Arizona is going to be a place where we will especially focus, because again, it's a place where we do have the online access and the sports net, so it's like that perfect opportunity. So look, we're just so excited that Jason saw the opportunity with us. Obviously, he had choices with other partners. We're excited that the governor of the state said, hey, you're right. There's no reason why a women's professional franchise shouldn't have the access that we just gave to these 6 other men's, professional sporting events. And from our perspective, it's going to be a way to introduce, sports bettors to women's sports, but also, women's sports audience to sports betting. So it's just a win-win all around.
Given where we are, from where you sit, given where we are in the pandemic, are you seeing pretty crowded casinos and crowded facilities right now?
Oh yeah. I mean, it depends. State by state. Different states have been opening up at different times, and I think that there's sort of different levels of open. But for the most part, the physical casino business has been great. I think they just look, people have been for a long time with more limited choices as to what they can do with their time. They've had essentially forced savings, and now they're just starting to have some time to go out and enjoy. So yeah, no, it's been we've seen great business across all of our casinos, and we're excited for that to continue on through the rest of the year.
And Jason, before we let you go, I'd be remiss if I didn't ask. I mean, how you feeling? Like tonight, like are we gonna do this thing? How has the last couple of weeks been for you guys on the Sun side? It has been a wild ride, and look, as far as I sit here today, a couple injuries on the Eastern Conference side, I feel like you guys have got to be the favorites right now.
I had a feeling I might get asked about the Suns as well, which is great. Obviously, we're this morning keenly focused on this deal with Bally's and promoting women's sports. But yeah, look, it's been an exciting run for us on the Sun side, and been a very competitive series. A lot of fun to watch, and it goes right back to the issue of fan engagement. If you give people a product that's interesting to watch, they're going to tune in. And I think tying sports betting into that, you can just imagine how much that's going to amplify it. But look, we're looking to go out to LA and close it out tonight, and hopefully we can do that. So exciting times for both of our franchises.
Oh, Miles, you can go get off now. Go place your bet.
I got there's 12 hours. There's 12 hours to tip off, so I got a lot of work to do before now.
All right. Well, fair enough. And congrats to you both on the deal. Bally's chairman, Soo Kim, and the CEO of the Phoenix Mercury and Phoenix Suns, Jason Rowley. Good to see you both.
Thank you.
Let's bring in Andrew McDowell with Love Market and Cafe. He's the founder and operator there. We've also got Yahoo Finance's Danny Romero joining in on the conversation. And Andrew, we should mention this is a recommendation, not a requirement. But I imagine you're looking at this saying, here we go again, especially given just how badly LA County was hit early on this year. How are you looking at the restrictions now that are in place, and what does it mean ultimately for your business that is really just in the process of recovering right now?
Yeah, there's a great challenge for the small business owner. We really have to be thoughtful about not only our customers, but also our staff. So I think the focus for us really is what are the things that we need to put in place to make sure that our staff are safe, and safe staff are going to mean safer customer. And so if we continue to require our staff to wear masks, regardless of the changes, the ups and downs, we're going to have a consistent interaction with customers. And then we hope that they'll be responsible as well when they come in and adhere to the current guidelines. And if they do that, and we do our best, things will continue to slowly rise back up to normal business rates. But if we keep changing and yo-yoing, it's going to be a challenge for us to have regular interaction or a product offering for our customers, which just means loss of business. And so we just have to do the best that we can to be safe and consistent and just wait this out. There's no reason to rush back. Outdoor dining is now extended for another year in LA. So why not take advantage of that, prepare for that for the next year, and then as things change after several months, then we can get back to normal.
And Andrew, I mean, I'm going to let Danny jump in a second here, but when we talk about kind of the risks to the frontline workers who have to worry about mask mandates, I mean, we've seen things turn violent, seen things unfortunately turn deadly out there. I mean, how much of an issue is it when it comes to your workers having to worry about it and kind of your customers out there maybe potentially being an issue in enforcement?
Yeah, we're lucky we have the greatest customers in the world. We have people that care and are thoughtful. They love our community. And so in South LA, we have a really good group of people here. But it does make a difference to our customers, the way that we engage them over these challenges. So there are times where people don't come in with a mask, but they recognize they forgot their mask and they ask if we have one. And then we give them a free one. We also sell them. We don't have our staff enforce any mask rules. And it's mainly because the safety is most important for our staff. And if they feel comfortable and they know to keep their distance from folks, then we can encourage people to obey the current guidelines. And if they don't, we're not going to force them out, but we are going to let them know that that is our preference. And our staff know how to engage that. And they also know that safety is more important than enforcing the guidelines, especially with the guidelines ever changing and sometimes not being all that helpful. We know that our staff need to adhere to the most safe protocols that we can. And from there, everyone will have hopefully a positive experience and continue to come back, but recognize the next time they come back, if they should have worn a mask the previous time, then we'll wear one the next one.
Danny, you want to jump in?
Yeah, Andrew, what have you seen on the customer side? What are people's response? Are people worried or concerned?
Yeah, it's an interesting transition that's happening. So people slowly started coming in without masks, and that was over the course of about 2 to 3 weeks since the guidelines changed in mid-June. And then now over the last few days, people have begun to wear them again the entire time they're here, outside of when they're consuming a coffee or having a sandwich. And so people are starting to become aware that the Delta variant is serious, and they're spacing themselves appropriately. Not everyone, but most people are. And I think that that's helpful, because if you have a space that gives people an opportunity of where they want to sit, then they'll choose the safest place and the place they feel most comfortable. And we just have to create those spaces as small business owners and prepare our customers for a safe experience.
Andrew, how far along are you in the bounce back right now, at least with your business? When you compare it to pre-pandemic levels, where are you?
The challenges for us were that when COVID hit, we lost 90% of our prepared food business. I would say that since then, we've come back. We're about 75% of where we used to be. And that's not enough yet. But with all of the support that's been out there through the PPP and the EIDL, business owners have been able to get by and make sure that our employees are paid. And so that extra level of comfort has helped us stay open and continue to employ and hire folks as we normally would, even though business isn't fully back. I would say we still have a ways to go. There are many reports out there that, business is better than ever. That's not the case for most businesses. Might be the case for a handful. But most of us are still trying to figure out how to make ends meet each day. And the support that we've gotten from the government thus far has been very helpful, and we hope it continues until things are back at 100%.
Andrew McDowell with Love Market and Cafe. It's good to talk to you today, and our thanks to Danny Romero as well for joining in on the conversation.
Welcome back to Yahoo Finance Live. As we've been watching, we've seen the growth of people in crypto turning to lending platforms. BlockFi, of course, one of the ones that we talk about on this show a bit. Celsius we had on earlier this week, but there's another one out there, Nexo, that has been gaining some traction. And for more on what that platform's been seeing as people turn to try and earn yield on their crypto assets, I want to bring on the co-founder and managing partner at Nexo, Antoni Trenchev, joins us right now. And Antoni, when we look at it, it seems like a no-brainer in kind of explaining this, but there are, I guess, nuances that are different than maybe the way you would interact with the bank. But talk to me about what you've seen here in terms of the growth on your platform and how much money per user might be coming in now.
Well, the growth has been spectacular. Last year, this time around, we had closer to $2 billion of assets under management. Right now, we're sitting on 15 billion dollars. So that's a 700-800% growth, which obviously in line with the growth that crypto has itself experienced, but we are seeing people who previously were not native to the space come in, experiment with crypto. The Elon Musks, Paul Tudor Jones, and Michael Saylors of the world have had their effect on bringing people in. And quite frankly, in the macroeconomic environment, further exacerbated by the response the governments and central banks have had to the COVID predicament, all poured in favor of companies such as Nexo and the crypto space overall.
Yeah, and on your platform, you pay up to 12% in terms of yield on crypto assets. It's a bit of an apples and oranges comparison. I mean, I suppose if you were comparing it to an interest rate at a bank, since there's added volatility in crypto. But I mean, when you look at that, how has it changed maybe as people dip a toe and get comfortable? We were talking about BlockFi earlier on, and obviously there are counterparty risks and risks around centralized lending platforms that people need to consider here. So they were saying that, there's a small number that people might actually deposit to start out with. But I mean, on average, what do you see as people kind of test out your platform and maybe grow what they feel comfortable risking?
Well, we are the lender that has historically predominantly been focused on the retail. Some of the other companies that you mentioned, they were more initially into the institutional space. So right now we have all sorts of clients. We have somebody who deposits as little as $1,000. That is the minimum that we have. We have, young entrepreneurs who sit on a bunch of crypto wealth, so several $100,000. And we have the whales who are sitting on millions and hundreds of millions of dollars worth of crypto. But I think you mentioned a very interesting detail here, like how does that compare to a banking product and apples and oranges? Yes, in certain aspects it is, but quite frankly, it functions exactly the same way. We in the Western world have been brought up with this notion that, a bank automatically equals safe, and that might be true for, some of the smaller clients or mid-tier clients who are covered by something like the FDIC insurance up to 250,000, or the ECB equivalent over in Europe where it's 100,000 euro, and that is as safe as anything because that's guaranteed by the government. But if you're above that threshold, you have the same counterparty risks that everybody has. And on our platform, everything we do, whether it's on the borrow or on the lending side, is over collateralized. So I would argue, just from a financial perspective and the way that the business is structured and how it actually makes perfect sense, that we are safer, especially for the larger clients, than your average bank.
Yeah, even with that said, it feels like you might have a harder time convincing regulators, especially given the environment right now in the crypto space. We saw the latest crackdown on Binance, not just over in the UK, but in Japan as well. How are you looking at all those headlines right now and what it could potentially mean for your business?
Well, I wish more people read the whole articles than just the headlines, because when you actually examine it, what is happening, the regulators are cracking down on a certain aspect of the crypto business, and actually the crypto exchange business, which is leverage. Historically, leverage and 100x, 135x leverages have been very negatively received in the United States and elsewhere, in the UK as well. So I think what we're seeing right now is not an attack on crypto per se. If you read the article, the press release by the FCA in the United Kingdom, it says, we are going after the derivatives product and the high risk, high leverage product, and it's not even our job to oversee and regulate crypto assets such as Bitcoin and Ethereum per se. This is almost verbatim from their press release. So people are stuck with the headlines, so it's a little bit more complicated. My personal feeling from everything I'm seeing, and we interact with regulators throughout the world, crypto as such is here to stay.
Yeah, it's very interesting to see kind of the different things that they are taking issue with, but for the time being, these lending platforms continue to grow. Yours included. Antoni Trenchev, Nexo Co-Founder and Managing Partner. Appreciate you coming on here to chat with us today. Be well. In its battle with other worker collaborative tools like Microsoft Teams, Slack is out with a new slate of its own tools to supercharge productivity in the work from anywhere environment. And one of those tools catching a lot of attention today, Slack Huddles, the new audio tool that will let you collaborate in real time with coworkers using your voice rather than having to type out all those messages and go back and forth, typing away all the time. It's an interesting new tool. And for more on that and the other tools in that slate, I want to bring on the co-founder and CEO of Slack, Stewart Butterfield, joins us on the program today alongside Yahoo Finance's Brian Sozzi. And Stewart, appreciate you coming on here to chat. I mean, obviously, this battle's grown more intense as people have kind of gotten accustomed to working from home now. We're talking about what these tools enable in unlocking that productivity.
Well, thanks for having me. Yeah, one of the things I think has happened over the last 20 years without us really noticing is we've gone from a world where digital technologies supplement the in-person techniques we have for communication and for managing and reporting on a business, to a world where the in-person supplements the digital. And I don't at all discount the value of getting together face-to-face. I think it has tremendous value. But I think what we've proven over the last year, 18 months, is that we are able to function without offices. I don't think we would be able to function without software. And it's probably time for people to take a little bit more of an experimental or creative attitude towards the ways that we work. You can't go through life questioning everything all the time unless you're a professional philosopher. But this is such a big moment of disruption. I think it kind of behooves us all as workers and as leaders to reimagine the ways that we work and think more about the virtual HQ or the digital HQ that we have in addition to the physical offices.
Stewart, I because of Slack's existence, I know that I have sent far fewer emails the past year and a half of the pandemic. That's just the reality of it. Once I do go back to the office because of something like Huddles, will I have less meetings in person? Will this new feature just end the meeting?
Well, that won't end them, but I think it'll expand the repertoire of tools we have available to kind of to serve the same purpose as meetings. And so we launched Huddles, which is audio only communication, different than a call. So you don't start it and stop it. I don't have to interrupt you in order to talk. This is not a perfect analogy, but you can imagine it like a taxi cab dispatcher or police radio or something where people are tuned in, and if I speak, you'll hear me. The advantage of that is you can kind of have a ad hoc 2-minute conversation instead of something that's structured, instead of having to wait till next Tuesday, 11:30 till noon, where we all have to stop what we're doing and join that call. And because it's scheduled for 30 minutes, will take 30 minutes. You can have those quick one-offs. So you can imagine a group of marketers launching a new website, or recruiters organizing a university job fair, or whatever it is. You kind of recreate the spontaneity and the serendipity of office-based communications. But on top of that, we also launched a new set of video messaging capabilities. And ideally, that replaces some meetings, the ones where it's just kind of people going around the room and giving their update, because we don't need to be doing it at the same time. And I think, we talk a lot about Zoom fatigue, but I think it's also just a matter of being really overscheduled. So if I can record my update for you at 8:17 and you listen to it at 9:53, that's the same value as if we all had to stop at precisely 9 a.m. and have this daily stand-up meeting.
I remember, and I should have paid more attention to this, I remember you and I talking about features like this last summer, even before then at the height of the pandemic. So I guess you gave me some guidance there on what's to come. But now that we're starting to go back to the office and we will have a hybrid workforce, what other pain points are you seeing coming down the pike?
Well, it's funny, we'll see how it turns out, but I feel like hybrid is a term that 10 or 20 years from now will sound kind of like paperless office does today. It obviously meant something at the time, but the question of how much paper there is in the office is not really an important one when you think about how the organization operates. And I think ultimately the percentage of time that people are in the office will feel as irrelevant to how the organization operates, given the set of technologies we have to transcend that. And again, I think it's great to get together in person. I don't think we need to do it all the time, and that's what we've proven. There's two other things to take into account here, and one from the employer's perspective, being able to hire from anywhere. This is something that we've really felt the advantage of, rather than only those locations where you have physical offices, is huge. You get a big range of talent, becomes more inclusive and more diverse. And from the employee perspective, I think it'll be a kind of a market-driven decision how much time people end up spending physically together. Because imagine you're a software engineer in a competitive environment and you have two job offers, and one is you must come into the office 5 days a week, and the other one is you have the option. Who wouldn't take the option? Given similar compensation, similar excitement about the opportunity, everyone would prefer to have that flexibility. And I think that's a message that everyone should be hearing loud and clear from employees.
Well, who is not hearing, and I would argue, Stewart, are the investment banks. I've been a bit surprised by the hard lines some of these investment banking CEOs have taken with their employees that, hey, return to work or you just may not have a gig. Do you think there's a cultural issue inside of Wall Street and even many other big companies that they just don't know how to use these tools properly and frankly don't want to?
Well, I don't want to speak for any of them. And I think some of it ends up exaggerated. There are interesting cases. So, David Solomon at Goldman Sachs kind of famously proclaimed everyone's coming back to the office. I had breakfast with him a couple weeks after that came out, and the thing he was principally concerned about is like 5,000 fresh out of college associates starting at the same time. And I think from the perspective of younger people, where the office is a greater percentage of their social life, it is important to get them together face to face. But at the same time, Goldman had their best quarter on record, just the last quarter. So obviously the business is able to continue to perform with everyone working from home. And rather than think about this as like everything's the same as February 2020, except we're only going to come into the office 2 days a week, you don't like hop to the future from some moment in the past. You kind of evolve from where we are. So if you think about where we are right now, it's net positive. Like we're going to as the pandemic kind of fades, we're going to have a lot of the amenities of regular life back. People going to the theater and live music and all of that. So life is better. And then we'll also have in-person collaboration back as one of the tools in our toolkit to operate the business. But so many people went from 200, 250 days a year of business travel to zero. People went from 90-minute each way commutes every day to 0-minute commutes. I think it's going to be pretty tough for people to give that up now.
Yeah, Stewart, it feels like we're kind of beyond that conversation of going back to normal, especially when we consider how much has changed in 18 months. You've been talking a lot about the changes in the way we work. I wonder if the measure of productivity has changed as a result of what we've gone through. I mean, how do you think we should be looking at that?
It's famously difficult to measure the productivity of software engineers because people have tried these things like we'll count the number of lines of codes that they write. And so people change their coding style to be much more verbose, or we'll count the number of bugs that they fix. And then people would, anytime they make a change, go file a bug and then fix it so it looked like their count was higher. As more and more work shifts from the equivalent of clerical work, and more of that stuff is offloaded to computers, the work that remains is more demanding of people's intelligence and creativity. It also means it's harder to manage and it's harder to measure the impact. So for software engineers, one of the things to look at, I think, is how happy are the employees? Because if they're happy, it doesn't necessarily mean they're working their hardest, but if they're unhappy, it probably means they're not productive, because it's incredibly frustrating to come into work every day and feel like you're not making a difference, like your work doesn't matter, like it's not adding up to anything. I think the way that we measure productivity will have to change, and ultimately businesses at a high level will judge their own results, given how good those results were for businesses whose core wasn't hammered by the pandemic. So, financial services, technology, media companies, retailers, or online retailers at least, all did very well over this period. And I think they have to take as a lesson from that, their productivity was high.
Yeah, and I mean, we've seen some of the tools come out. I think one of the most overlooked tools in Slack has been Slack calls. I've been Slack calling everybody to the point where probably people are mad at me. But I am curious, as you see kind of competition here heat up, we had Windows 11 coming out and Microsoft bundling their team software in with that. I'm curious, when you look at that competition, what you make of it and how big of a risk that might be to Slack's future growth if they are going that route.
Yeah, look, I mean, obviously it's a familiar tactic, I guess, when you think about Microsoft. And I think it uses a lot of leverage they have to try to drive their way into business. I'm not particularly concerned about it in the long term, because you think about Instagram didn't need to be pre-installed on iPhones to get a couple billion people using it. It's where the value is. So if you're an organization that today uses Zoom for video calling and you buy a new laptop and it has Teams installed on it, you're just going to install Zoom and start using that for video calling. And likewise, if your organization uses Slack, channel-based communication, you're going to install Slack. So we'll see. I mean, I don't think it's a fair tactic, and I'll leave it to the regulators to investigate the ramifications of it. But ultimately, I don't think you can't kind of force people to use software in the same way that back 20 years ago when they pre-installed Internet Explorer. People just didn't know the internet. They didn't know browsers. They didn't know that there was an alternative. Now people know that there are alternatives.
Hey, Stewart, since we last spoke, I hear you have a new addition in the family. Congratulations. Baby Oliver is now a member of the family.
Yes, thank you. 6.5 weeks ago. And another fascinating thing about this, the pandemic is, so I've been on paternity leave, and that means I haven't been working very much. But the time I'm spending working at home as I've started to come back, it's a very different experience than if I had to, get on the train every morning, had an hour-long commute, and then was in the office all day and came home after the baby was asleep. That kind of experience of being able to be closer to family, I think, is another thing on the list that it'll be difficult for people to give up. I'm eager to get together with more of my work colleagues again in person, but I definitely, from my personal perspective, it's not something that I need to do 5 days a week.
Well, congrats on the figurative baby and congrats on the literal baby here. Stewart Butterfield, Slack co-founder and CEO, introducing some new tools out there. Thanks again for the time, and thanks to Brian Sozzi as well.
Joined now by Paychex CEO Marty Mucci. So Marty, I'm curious to know what you make of this labor market right now, because we keep hearing employers saying that they're struggling to find workers. They're trying to lure some employees back to the office with these higher salaries and these bonuses. And yet we do see the labor market right now still not yet on its feet.
Yeah, basically what we're seeing is there's a lot of job demand, as you mentioned, but it's still a little difficult to get them back, get workers back, particularly frontline workers. Now, we have seen quite a bit of hiring, but not quite obviously filling the roles that are out there. And I think, we're seeing it's a combination of many things that you've probably already talked about. Unemployment still being a little bit higher in most states until September, till Labor Day. We also have a number of people who have stimulus checks, money that had come in over the last 6 months that is giving them a little bit more cushion to be able to stay home and deal with some things. You have childcare and dependent care that's not quite settled out yet until schools get back in the fall. And you also have COVID health concerns. People just worried that not enough people are vaccinated to get back to work. So all things kind of coming together probably in the September timeframe, we think, to really get the workforce back to where it should be.
Marty, what are you seeing in terms of small businesses ramping up and hiring more workers, especially that restaurant, bar, hospitality, leisure section that we keep hearing is having a tough time finding workers? Are you seeing, at least from your clients, that things are starting to improve there?
They are, Alexis. I mean, it's tough. They're having to raise wages, but our clients alone have hired 300,000 new employees in the last month, 3 million in the last year. So we are seeing things pick up. The wages have gone up. Overall wages, hourly earnings have only been up about a little over 2%. Leisure and hospitality wages are up over 10% on a weekly basis, and so we're seeing hours worked up quite a bit, and the weekly earnings going up. And you're seeing bonuses, sign-up bonuses as well to get people to come into these frontline jobs in leisure and hospitality.
So, Marty, are you seeing a big difference between some of your larger clients and smaller clients? What kind of job growth are we seeing, particularly amongst those small businesses?
Yeah, they're still having the most difficult time. It's more difficult for them to raise wages or to offer things like benefit packages or college tuition repayments. These are the things larger businesses can do that we're seeing that they're doing things to encourage employees as they hire them on. Those things are bigger benefit plans, retirement plans, tuition reimbursement, better health plans. Those are things larger businesses can do to attract. So they're doing a little bit better, where small businesses are having a little bit more struggle getting workers back in. But again, I think it's all those things I mentioned. And we do think that toward the fall, from what we're hearing, it looks like things will get a lot better for small business as well.
We heard a lot about businesses not being able to survive the pandemic, a number of small businesses closing their doors for good. But what are you seeing in terms of new business opportunities and new businesses coming online and using Paychex?
Yeah, new business formation has really been extremely strong, believe it or not. People have either left businesses, or when other businesses close, they form new businesses. New business formations are up like 70% nationally. So they're actually very strong. We're seeing that at Paychex as well. One of our strongest sales segments this last fiscal year that just ended in May was in the small business startups. So we did very well, also because you can easily sign up and actually buy and set up yourself on payroll, online, that all making it easier. And we have very strong mobile app on our payroll and other products that make it very easy to not only to start up payroll, but to hire employees as well, all in a paperless fashion. So we're actually seeing new business formation start up. The ones that were existing, PPP loans helped a great deal. We certainly heard that many times. Right now, the employee retention tax credit is also helping keep cash with small businesses to help them either fund new employees or pay more to the existing employees.
Might you know a little bit about perhaps the regionality around some of these trends? We saw so many people leave the cities to the point that folks were saying that the cities were dead. Are you seeing these new businesses being created perhaps outside of the cities, perhaps in suburbs? And where are essentially employers trying to hire the most employees? Is it in those urban areas?
We are seeing some of that. You're seeing in kind of the second and third tier cities, probably the most new business formation is starting there. You're also seeing regionally an awful big pickup in the South. You know, the South has been the strongest from a jobs hiring right through the pandemic. Of course, there's been a migration, as you mentioned, out of cities, but also out of regions. You've seen a migration to the South. The strongest, you know, states in the jobs index, for example, are the Florida, the Texas, pretty consistently, Georgia, North Carolina, those places. You know, you're seeing those areas have the most employees to hire, and therefore they're attracting the most new business formation.
What are you seeing in terms of the construction industry? Are you seeing, because we know housing has been booming, and I'm wondering what the effect has been on jobs in the construction business, because I know they've also been hit with a lot of supply chain issues.
Right. Great question. Construction has really led job growth of all the industry sectors for almost the last 3 years. And yet we've seen just a slight downturn here as the supply chain has been difficult for them. So wages have still consistently been around a 3% growth rate, but the job growth has, and the weekly hours actually have really kind of gone negative for the first time in almost 2.5 years. Weekly hours worked have decreased because of supply chain issues. We hope that's all temporary. It feels like to our clients that it's going to be temporary, but it's made it a little bit difficult this summer, certainly for construction, which has led the way for a long time.
There is no need to tell you that trade between Canada and the United States, trade between Mexico and the United States is crucial to our economy. It's why we invite into the stream the ranking member of the House Ways and Means Committee, Representative Kevin Brady of Texas, because July 1st marks, is it 1 year that the new NAFTA, the USMCA, has gone into effect? And I just want to read something to you, Representative. It's from Matt Silver, who's the CEO at Forager. They're a cross-border logistics platform. And he said that it's too soon to determine if, quote, USMCA has boosted cross-border trade because manufacturers and companies usually plan on product launches or factory investments at least 2 to 3 years out. What would you say to him? Have we seen the benefits yet?
Yeah, so I might add, I think one year is an important date to celebrate really on this agreement, but certainly with the COVID pandemic, that really changed a lot of these trading relationships. So certainly I would agree to the point this hasn't been a true year to see what those benefits are. But here's the key thing. One, it strengthens a partnership in North America that has been working. Secondly, we modernized key parts of the agreement that frankly didn't exist when the original NAFTA was created, in the digital services area, in the intellectual property area, in services overall, in just as was noted, new changes to be able to move our goods faster and quicker and more affordably across these borders. You know, we'll see over time how big a difference this is, but I'll tell you, this modern agreement has all the potential for strengthening all three economies.
Congressman Brady, it's Seana. It's good to see you again. Trade is clearly a very important issue for you. I'm curious to get your take on President Biden and his approach to trade so far. I know you've said time and time again that America needs to lead on trade. Do you think President Biden is leading on trade?
I don't yet. I'm hopeful he will. It is important for America to lead on trade. Frankly, you know, as our economy recovers, we need more workers. Clearly, we need more customers. And we need to be able to level the playing field, sort of tear down those America need not apply signs we see too often around the world. Clearly, these opportunities exist in Europe, in the UK. We need a second comprehensive agreement with Japan. I argue to the Biden administration that it's not enough to simply have China comply with phase one. We need to negotiate a phase two agreement with China as well. So and mainly because our competitors, whether it's China, Europe, or others, are out there negotiating agreements to their advantage when America goes to the sidelines, as we are right now in this de facto trade moratorium. We're losing out. Certainly our businesses and workers are.
I'm going to combine trade and taxes because China apparently is going to be opposed to this minimum global tax that several of the key industrial countries are talking about. But then there's the issue in the United States of tax, or rather of trade status we give to emerging economies, where we don't impose tariffs or, I guess, taxes, regulations on them in return for their bringing their legal framework up to speed. Is that an antiquated way to address all of this? Because I would imagine China will move right into that gap.
You know, two thoughts here, because you have combined two areas that I love, by the way. First, the fact that China is not a market economy needs to be reflected in trade agreements and relationships, including especially at the World Trade Organization, where China's really taken advantage of that to skirt many of the global standards and rules that they should be complying with. I think that's crucial. And there, I think the Biden administration and this Congress are very much in lockstep on the need to address that. But secondly, it drives home the point that the Biden tax hikes make America dramatically less competitive with China. Raising the corporate rates and the international changes actually make it better to be a foreign company and a foreign worker rather than a U.S. company, a U.S. worker. We will lose if those tax increases go through. We'll lose jobs, investment, research overseas, including to China.
Congressman, let's talk about infrastructure and the debate there, because we had some developments over the past week. President Biden reaching the deal with a group of bipartisan senators there, the $1.2 trillion package. I guess two-part question here. One, would you support that $1.2 trillion package? And what do you think about some of the pay-fors that are included there? Is it enough to pay for the $1.2 trillion in spending?
Yeah, in order, I'm hopeful that we can reach an agreement on bipartisan infrastructure package, but only if it's not tied to the promise of higher tax, crippling taxes, and more entitlement spending tied to that. I know the president has sort of flip-flopped a bit on that, but Speaker Pelosi and Leader Schumer have not. They want the higher taxes. They want trillions of more spending. That will make it difficult for Republicans to support. And on the pay-fors, honestly, I briefed our Republican conference earlier this week, and unfortunately, we have very little details. We've got sort of the top line in the numbers, but how they've arrived at some of these figures are a bit puzzling. So we continue to ask our Senate counterparts for more details. I want to be able to give a recommendation to our conference on whether these pay-fors are real or not, and we just don't have the details to make that determination.
Is one of the pay-fors potentially the Biden administration's plan for, I don't want to put our viewers to sleep, but you should pay attention to what they call the step-up tax basis. You know what I'm talking about here, because it's being sold to us as it's only going to hit millionaires and billionaires, and yet we should all have a rich aunt or uncle who should leave us as an inheritance a house that has grown in value from, say, $300K to $1.1 million. But if we are the recipient of that inheritance, don't we get hit by this new tax step-up that they want to do?
Yeah, you possibly do. So this is not included in the infrastructure package now, will be included in the new tax and spend bill later. And while it's billed as hitting the wealthy, it is a tax on wealth, but on family-owned farms and businesses, Americans who have created a nest egg, usually in property, for them or for the next generation. And by repealing that stepped-up basis, you've made it just dramatically harder to be able to pass that nest egg down to the next generation without having to carve it up and sell it to pay those taxes. I think it's a pretty cruel tax hike. And I'll tell you, in much of America, it is the number one issue that I'm hearing from our local businesses, our local farms and ranches. We just held a hearing on that this week, several of them in Congress, it is getting a lot of, a huge amount of pushback.
And Congressman, we just want to get your thoughts. We just had the breaking news at the top of the hour that former Secretary of Defense Donald Rumsfeld, that he has died at the age of 88. Just your thoughts on that and the legacy and his, I guess, memory that he's leaving behind.
Well, clearly extremely talented leader, and served President Bush just admirably, brilliant, understood the role of a strong national defense, understood that the wars we're fighting now and the challenges we have worldwide aren't what we used to have, and was making those adjustments and bringing those reforms to the Defense Department. So it is sad to hear that.